Good morning, students. Welcome back to the session on advanced accounting. So today we are going to continue with our discussion on accounting standards. We were discussing accounting of leases, wherein we covered about the accounting of lessees. So today we plan to start with the accounting of lessors. This is going to be quite similar to what we have done, but with a different perspective. Okay. So if you can just all move on to page number 1.83. We are continuing on accounting standard 19. Okay. Alright, so now we are going to talk about accounting of the lessor. Now, in relation to the lessor, there are few things which though are similar to the lessee, but still its computation may be slightly different. So let's understand those things first of all before we move on to the accounting entries. Minimum lease payments. You all remember what was minimum lease payment? Lease payments to be paid by lessee to the lessor. Residual value, amount which is guaranteed or unguaranteed. Both these things we discussed. So there is a concept of gross investment in the lease. Gross investment in lease. You look at it from the perspective of lessor. How do you compute it? Gross investment of lease is equivalent to MLP plus UGRP. This is equivalent to MLP plus unguaranteed residual value. Okay. Similarly, there is another concept which is called as net investment in lease. And you will be thinking, sir, what do you mean by gross investment? What do you mean by net investment? See, it's the amount which the you can say covered in the lease arrangement. This is the amount which forms part of the lease arrangement which between the lessor and the lessee. And in terms of finance lease, as we all discussed, that finance lease is a kind of financing arrangement only. Therefore, in case of a finance lease, now we are looking at as to what's that amount. So first of all, we look at the gross amount. Now we are looking at the net amounts. Now in terms of net amount, what do we need to do? Very simply, from this gross amount, we need to reduce a couple of things. Present value of MLP and present value of UGR. MLP and present value of UGR. So what are we checking now? You may be thinking, sir, both of them are same. Yes. So basically, when you look at MLP plus UGRP, this involves time value component, which if reduced, so if we take away the time value component from these two, if we take away the time value component, what do we get? We get this present values of both the amounts, and which is also termed as Unearned finance income. Unearned finance income. Sorry, I think I just put down this unearned finance income will come over here. And for this, let me just correct this. Unearned finance income. What do we do? We will first of all reduce from this gross investment lease unearned finance income, which is present value of MLP plus present value of UGR. Okay, so let's now try to understand. Sushil is asking, sir, please use the full form. See, if I use the full form, this will become very big. We all understand the full forms. Yeah, so you may note down the full forms if you want. And you can all start referring to the page number 1.84. Okay, so let's try to understand the concept now. First of all, we are starting with the total value. Total value means the amount which involves the present value plus the time value. So if we look at these two, what do they include? Present value plus time value. Okay. Now, if I reduce present value from these two, if I reduce present value from these two, what do I get? I will get time value of money. Yes or no? So that's why over here, what are we doing? From this total amount means present value plus time value, which is equal to this. We are reducing the present value of both of them. So what are we left with? Time value. Or you can also say this is a finance income which is not yet earned. And when will you earn this? Over the period of time. So that is something we call as unearned finance income. And this unearned finance income, if reduced from gross investment, or you can say from the gross investment, if we reduce this time value, then what do we get? Present value only. Then we get the present value only. So what is this net investment in the lease? This is nothing but equivalent to present value of MLP and present value of UGR. As simple as that. Correct? Yeah. Clear on this? Clear on this part? Any questions? Any doubts? In case you have on any of these terms, please let me know, because at times you will see these type of questions being asked in the exam. So that's why it's important for you to understand this. Sometimes the question will ask you to compute only these three things. That's it. You will not be required to pass accounting and business. Only this much part will be required to be done. Clear? Okay, so we can move on to illustration number 2 now. Okay. Manish has a good query. Manish is, sir, why the guaranteed value will not come here? See, the guaranteed value is always forming part of minimum lease payment. So that's why it's not coming in separately. It's already forming part of MLP. Kushi is asking, sir, can you please tell again what was present value plus time value? See, very simple. These are the lease payments, let's suppose, over the period. Yeah. Now, if we compute their present values, you remember we computed the present values of all of these lease payments. What do we get? Present value of lease payments. Or we can also say present value of minimum lease payments. Correct? If these present value of minimum lease payments, if we build interest over the period, what do we get? The future payment. So if you say MLP, what is MLP? It comprises of two things: the present value plus the time value of money. That's it. Okay, was she clear on this? Yeah. Okay, so then I think we can move on to illustration number 2. Prakash Limited leased the machine to Badal Limited on the following terms: fair value of the machine, lease term, lease rental per annum, guaranteed residual value, expected residual value, internal rate of return. Internal rate of return means the discount rate. So you should be happy. Discount rates are given to you in the question. Discounted rates for year 1 to 5 are. So in the question, PV factor is also given to you. See, one is the discount rate, second is the PV factor. Now you are also given PV factor. So at times question may give you the PV factor, and the PV factor is given up to 4 decimal places. Okay. You are required to compute unearned finance income. So can you all start computing this? We have already discussed about unearned finance income. Can you all start computing it? I'll also start this in a while, and you will start sharing your answers. Unearned finance income. So for computing unearned finance income, what do we do? Yes, quickly. MLPs are given to us. We also have guaranteed residual value, 1,60,000 in the question. Okay. And expected residual value is also given in the question. Basis this, you can solve and let me know the answer. Yeah, you are onto it. I'm just hoping that you have started solving this. Okay, so I'll also start solving this now. And if any of you complete this, start sharing your responses. This question, because we are required to compute unearned finance income. So what does it mean? We need the time value. So the future values and all are available. So for computing the time value of money, we need to go to their present values. Okay, so let's compute their present values. So we have got years 1, 2, 3, 5. MLP in all of these 3 years plus UGRB we need to cover. Because MLP doesn't include UGRB, so that's why we are writing MLP plus UGRB. MLP only includes guaranteed principal value. I think Sakshi has already computed this. Very good. Sakshi is getting gross investment equivalent to 43 lakhs. Okay. Now, we have got 5 installments of 8 lakhs. In the 5 years. Okay. Then the rate of return is also given. So we have got a PV factor for the 5 years. 0.8696. 0.7561. 6575. 0.5718. And 4970. Anushka has also solved this, and Anushka has computed the unearned finance income. Great. Now, because we are given guaranteed residual value and expected residual value means the total residual value. So from the total residual value, if we take out guaranteed, we will also get unguaranteed residual value. So 1,60,000. This is what? This will also come in the 5th year. This is guaranteed residual. Here again we will apply the same PV factor. And in the 5th year again, we will get unguaranteed residual value, which is equal to 3 lakh minus 1,60,000. 1,40,000. This is unguaranteed residual. How do we get it? 3 lakh minus 1,60,000. Okay. Yeah. So now we need to compute their present values. Total of this, if you can let me know what is going to be the total of this, because this is what? This is the amount of future values, or you can say summation of future values. So if you can give me the total of this and the present values, I will compute. So you can go to the present values. What is going to be that amount? A into B. A into B. Right? So what do we get? 6,95,063. Then we have 6,04,880. Shimli has also solved this. Then we have 5,56,000. Then we have 457,440. Then we have 397,760. Then we have 79,552. 52. Then we have 69,608. Okay, so Anushka is saying total of these two is 43 lakhs. So these two means MLPs plus UGR. Now MLP plus UGR, what do we call it as? This is also called as gross investment in lease. So what is this? Gross investment in lease. Okay. Sakshi has also computed all of these amounts. Very good. Shirisha has also solved this amount. Great. Now, the present value of all of these is, I think Shabir has solved this. Yeah. 28,30,920. Now, this is the present value. So, what do we call this amount as? Net investment in the lease. Correct. And the difference between these two, what is the difference between these two? Nothing but the time value of the money. Or you can say the finance income which the lessor would have generated on all of these amounts at the rate 15%. Correct? So the difference between these two, we say this is C and this is D. So C minus D. What do we get? 14,69,080. That's the amount you will get. And this amount is what? This amount is nothing but the finance. Kamal has also solved this. Kamal is asking, sir, can we take the figures in lakhs as given in the question? See, ideally, that's what you should do. But because the question involves calculations which are running into 4 decimal places, so that's why just to clarify, and just for the sake of simplicity of all of you, study has given this solution in full values instead of rupees in lakhs. But in the exam, you should cover this in rupees in lakhs. Okay. Then Manish has also solved this. Simple and easy to understand. Yeah. So simple. I'm hoping that we would have understood that largely the principle is same. Similar sort of computation which was required to be done by us when we were looking at it from lessee's perspective. Sanjay has also solved this. Great. Manish has solved this. Okay, so now moving further. Now we will look at the accounting entries which a lessor would pass. Let's again understand the accounting entries with the help of that chart only, similar to what we did in case of a lessee. Manish is asking, sir, why the question says fair value of machine is 48 lakhs? For you to check whether it's a finance lease or not. Okay. For you to check whether it's a finance lease or not. Now the present value of MLP in case of finance lease should be substantially equivalent to the fair value of the leased asset. If not, then it will not be a finance lease. Okay. Currently, the question doesn't require you to do this. So that's why this information is not of any use. But in the question, you may be required to assess it. Okay. So now we were talking about the accounting entries. So let's suppose if we look at 3 years. This is 1, 2. And every year installment of 1 lakh is received by the lessor. Lessee was paying and lessor is receiving. Okay. And we had computed its present value. If you remember, this came out to 2,50,000. Remember, this was only an example. So we are continuing with this. Now, in case of a lessor, this is the accounting of lessor now. Lessor must be having an asset in its books, which it will not record. Instead, what would the lessor do? On the date of lease, that means at the time of inception of lease, lessor would record a lease receivable. Okay. Lessor would record a lease receivable equivalent to 2,50,000. This is what would get recorded in the books of lessor. And because the lessor will not record the asset. Why? Because asset will be recorded by the lessee. It's a case of finance lease. So that's why lessor will not charge any depreciation on this. And again, similar to what we saw in case of a lessee, over the period of 3 years, lessor has to receive 1 lakh each. But currently, lessor has considered only 2,50,000. So that means this 2,50,000 over the period of 3 years should become what? 3 lakhs. So what should the lessor do? On this 2,50,000, lessor would accrete interest. So at the end of first year, therefore, what will happen? Lessor would say finance income. Sorry. Lessor would say lease receivable debit to finance income. Why do we get this finance income? Because it's similar to a loan which he has given to the lessee. It's similar to a loan which he has given to the lessee. Yeah. Which is now required to be received and on which he will earn interest. So on this, let's suppose 2,50,000 gives an interest of 25,000. So by the end of first year, what will happen? This lease receivable will become equivalent to 2,75,000. And at the end of first year, lessor will also receive an installment. So the next entry will be bank debit on that. To lease receivable. One lakh. As a result of which, this lease receivable will become 1,75,000. on which once again interest will be charged in the next year, installment will be paid. So same thing will continue such that at the end of year 3, it becomes 0. Priyanka is asking, sir, who will charge the depreciation? I think, Priyanka, you don't remember the concept we discussed last time in relation to lessee. Please go back to that point. Who was charging depreciation? Can any of you tell me who will charge the depreciation? I clarified this point today also. Can you all tell me who charges the depreciation in case of finance? Please remember, it's a case of finance lease. So who will charge the depreciation? Manish is saying lessee will charge the depreciation. Yes, that's correct. We need to remember the accounting entries of lessee because we are talking about finance lease. It's a mirror accounting if you see. At one place, lessor is recording a lease receipt for which lessee was recording a lease liability. Yes or no? Lessor is recording a lease income in the form of finance income because he is earning interest. Corresponding to this, lessee was recording interest cost, if you again remember. Yeah. And because this asset is the one whose risk and rewards have got transferred to the lessee. So that's why asset was sitting in the books of lessee, not in the books of lessor. And that's why who was charging the depreciation on the same lessee and not the lessor. She is asking, sir, finance income to P&L, don't we have to pass this entry to? Yes, you should pass this entry to. Okay. Kamal is saying depreciation will be charged by the one who uses the assets. No. Only in case of finance lease, it will be charged by the one who has got the risks and rewards attached to that. You should not say who uses it. The one who is getting the risks and rewards attached to the assets. Okay. And Atul is saying, lessee will charge the depreciation. That's correct. So with this, we come to an end to our discussion in relation to finance. All through, whatever we have discussed so far was all in relation to the finance piece. So I'll just quickly recap. First of all, we discussed about the meaning of finance lease, wherein the risk and rewards get substantially transferred to the lessee. Then we also looked at some indicators which the standard gives us, on the basis of which we assess whether a lease is a finance lease or not. In case the lease is not a finance lease, it becomes operating lease. Then we looked at the accounting requirements of the lessee, and now we looked at the accounting requirements of lessor in case of a finance lease only. We did not discuss anything in terms of accounting requirements in case of an operating lease. So now we will move on to the accounting requirements in case of an operating lease. Okay. Yeah. Okay, so first of all, I have few questions. Let me just see Who can answer this quickly? A has given car on lease to B. Yeah, car is given on lease for a period of 3 years. Okay, and B is required to make monthly payments to A. Useful life of car is 5 years. Monthly payment which we would make to A is 10,000 per month. Yeah. Now, in this example, first of all, you need to answer whether you will call this lease as a finance lease or an operating lease. Over to you. And please try to give me the reason. If you say finance lease, give me the reason. If you say operating lease, give me the reason. Waiting for your response now. Whether it's a finance lease or an operating lease, on the basis of the limited facts given in the question, you need to answer this. You might be thinking, but sir, there are certain facts which we require. On the basis of the limited facts which I have given, you need to answer this. Tell me, it's a finance lease or an operating lease? Ashit is saying, sir, it's an operating lease because its useful life is still left out. Okay, what about others? Manish is saying operating lease, I think, because it doesn't cover substantial life. Okay. What about others? Srisha is saying operating lease. Atul is saying operating lease. Kushi is saying operating lease. Sanjay, Sushi, they are all saying it's an operating lease. Okay. That's very good. It's an operating lease. Why? Very simply, because the life of the car is much more than the lease term. And in fact, we need to look at the economic life. The useful life is 5 years. Economic life will definitely be 5 years or more. Correct? Now, in this example, if you can also let me know who is having the risks and rewards attached to the car. Who is having the risks and rewards attached to the car? Okay, Sana answered this to be operating lease. And Nakul, Kamal, and Kajmula, they are all saying, oh, Nakul is saying finance lease, otherwise all are saying operating lease. Anushka, Samita, Sakshi, they are saying it's operating lease. Nakul, I'm hoping you would have understood why it's for a finance lease. And now can you tell me who will have the risks and rewards attached to the car? A or B? Okay, Atul is saying risks and rewards are with B. Sanjay is saying it's with Lessor. Namrata, Sakshi, Kushi, and Manish, They are saying it's with A. See, in this scenario, why did we call this as an operating lease? Because A, who has got the ownership of the car, that's why A is giving the car on lease. Also continues to have risks and rewards. He has not transferred the risks and rewards attached to the car to B. Yeah, that's why we are calling it as an operating lease. This assessment of life was only to check whether this is getting transferred or not. Yeah. Now let's try to understand why are we discussing this? What's the rationale? So let's now understand. We are now looking at the accounting of lessor and because the ownership and the risk and rewards attached to the asset are with A. So that's why who will record the asset? A. A will continue to record the asset in its books. Number one. Number two, at the time of inception of lease, in case of a finance lease, at the time of inception of lease, we used to pass an accounting entry. But now, at the time of inception of lease, no accounting entry will be passed. No accounting entry. No accounting. Okay. Next, at the end of year one, end, lessor will receive the income. Yeah. So what will lessor record? And 1 lakh. Sorry, bank debited 1 lakh to lease income 1 lakh. Correct? And lessee is paying this. So lessee will say to bank 1 lakh and will record a lease expense. 1 lakh. Similarly, year end 2, same accounting entry will be passed. Year end 3, same accounting entry will be passed. In this case, there will not be any present value computations. There will not be any recording of lease receivable or a lease liability. Nothing. So the only things which are getting recorded are hitting the P&L. So that means lease income is recorded by lessor, corresponding to this lease expenses recorded by the. Yeah, can you see this? So, in a way, you can also say that operating leases don't go to the balance sheet. Their accounting is limited to the P&L only, and very, very simple to do. You will be thinking it's so simple, sir. Yes, that's true. In case of an operating lease, accounting is very simple. Okay, clear on the accounting. Ganam is worried about the schedule of August. Ganam, every information will reach out to you on time. Please don't worry. Now let's focus on the session. So if you have any questions, any doubts around the accounting entries in case of an operating lease, please let me know. In case of an operating lease, I'm hoping you have understood the entries. Kushi is saying she's clear. Very good. What about others? Clear? Clear, all of you? There's a concept. Okay, I think Namrata has a query. Namrata is saying why no entry at the time of execution? Because that is only done in case of finance lease, where you record a lease receivable or lease liability. Where you don't record a lease receivable or lease liability. Okay. There's a concept which is called as lease equalization, which arises whenever there are escalation in the leases. What do you mean by escalation? Generally, in case of a lease agreement, you will see a clause that the lease amount will increase by 10% per annum, or say by X amount after every 3 years, lease amount will increase. This is called as lease escalation. Standard says that whenever there is lease escalation in the agreement, its equalization is required to be done. Let's understand how do we do the equalization. See, in the first year, lease rent is 1 lakh. In the second year, lease rent will become 1,25,000. And in the third year, this will become 1 lakh. That's the arrangement. And it continues to be an operating lease. Now, what's the lease term? 3 years. Why? Because it's a lock-in period. Now, in this case, standard says there is an escalation in the lease. So, what do? You equalize this. How do we equalize this? Take a total of these three: 1, 2, and 3, and compute its average. If you take the total of these three and take its average, what will the average come out to be? Can you all quickly let me know what will be the average in this case? What will be the average in this case? Quickly, I am waiting for your response. You need to answer this fast. Okay, Kushi and Manish are saying it will be 1,25,000. Now, let's see what will happen. Now, year on year, we will not pass an accounting entry with an amount of 1 lakh. No. In the first year, we will record lease expense by 1,25,000. Lessee will record an expense by 1,25,000. But corresponding to this, what is the amount that the lessee will pay? 1 lakh. See, the actual payment is only 1 lakh. Now, where do we take this 25,000 which has been booked extra as an expense? That will be taken to lease equalization reserve 25 to lease equalization reserve 25,000. Okay. Now, at the end of second year, what will happen? Just put the short form over here. Yeah, just create a space to lease equalization reserve. At the end of second year, once again, lessee will record an expense, lease expense debit 1,25,000. Now he will also be paying 125. So do we need to create lease equalization reserve? No. So this will be too bad. 1,20,000. Now, at the end of third year, he will once again record lease expense of only 1,25,000, even though he will make the payment for 1,50,000. Too bad. 1,50,000. So now this 25,000, where will you go? It will get adjusted with this lease equalization reserve. So we will debit lease equalization reserve 25. So that is how it will get adjusted. Here, this is called as adjustment in relation to lease escalations. Now, accounting entries for lessor will be the mirror entries. So what will the lessor do? In the first year, lessor will record lease income equivalent to 1 lakh. He will receive 1 lakh as income. So here again, we will say lease equalization. So next year, we will receive bank 125 to lease income. 120. Third year, he will receive bank equivalent to 1,03,000, but he will be required to record an income only to the extent of 1,25,000 to lease income. 1,20,000 to lease equalization reserve. Rama is asking, sir, lease term within a year of 12 months or less is AS 19 applicable? Of course, yes. Whether the lease period is less than 12 months, more than 12 months, has got nothing to do with the accounting of the lease. Then Rama is asking, can we call this type of arrangement as deferred lease rent equivalent to lease instead of lease equalization reserve? No. There is no deferment that we have done. Please understand, this is not the deferment of lease. This is about adjustment of lease escalations while doing the accounting. And what is the adjustment that we have done? We have made the lease amount equal over the term of the lease. So that's why we call it as reserve due to equalization of the lease amount. So this is the only term which we will use. Deferment will not be the right term to be used. Okay. Clear? Clear on these accounting entries? This is all about operating leases. You can also note it down. This is all about operating. In case the lease amounts will not have an escalation, then these lease reserves will go, and these will be the simple accounting entries which we passed at the when we started this off. Correct? Manish is asking why can't we directly recognize 1 lakh, 125, and 150? Because idea is to record it on a straight line basis instead of recording the escalated amounts as per the requirements of the standard. The standard is saying when you have fixed the lease amount for a term which is fixed, then over this period, you should record your expense and income on an equal basis. Why? Your lease is what you are getting for a term. That's why you need to equalize this. Someone is asking, sir, this reserve is a revenue reserve or a capital reserve? This is actually a notional reserve, which gets adjusted automatically during the lease period of time. Okay. Fine. Any more queries? Yeah, done. So then I think we can move further. The last concept in this accounting standard is a bit large accounting standard, and as I have told you, quite important also from the examination point of view as well. Next is about sale and leaseback arrangements. Kamal is saying, can we pay dividends from this amount? Kamal, please understand. It's a notional amount. Is this an actual amount? Tell me. If you pay dividend out of this, how will you adjust the lease amount? It's a notional entry. Sale and leaseback. See, this concept of sale and leaseback is not something which you will commonly find. Definitely, we need to discuss, but we will not get into too much details around it. We'll just quickly touch upon some of the things which are involved over here in terms of the accounting requirement. But first of all, let's understand what do you mean by this. Okay. So, let's suppose we have got two parties. So I will pick up two parties now. So we have got Kushi, who owns an asset. Yeah. And then we have Nakul. Okay. So now who is the owner of the asset? Kushi. Yeah. Kushi owns the asset as well as needs this asset. So one is the ownership. Second is that ownership is there, but I don't need this asset, so that's why I can give it to somebody else. It's not the case over here. Kushi also needs this asset. Means Kushi requires to use this. But Kushi currently is in the need of funds. If funds are required, funds are not available. So there is a kind of financing arrangement which Kushi is planning to do. Let's understand how smartly this can be done. Let's suppose the value of this asset is 10 lakhs. Okay. So first of all, what would Kushi do? Kushi will reach out to Nakul and sell this asset. Yeah. So Kushi has sold the asset to Nakul. Now by selling the asset to Nakul, the money which Kushi required has been received. So now Kushi has got 10 lakhs, but the asset is gone. Ownership of the asset is gone. But Nakul doesn't need this asset. So that's why Kushi has made this arrangement with Nakul that the same day when I sell this asset to you, same day I will take this asset on lease from you. On the very same day, Nakul has given this asset on lease to Kushi. So as a result of this, let's see what has happened. Asset came back to Kushi. The ownership is with Nakul, but the possession and the right to use has come back to Kushi. Plus, Kushi has also got funds. So both the things are back with Kushi. Now, out of this arrangement, one may be thinking that why would Nakul do this? Because Nakul will make money out of this arrangement. Maybe he will buy this asset. Maybe he will buy this asset at a price which is lower than the market price. Or he will make money in this lease amount, which he will earn over the period. Okay. Yeah. Now, once again, this type of lease arrangement may be an operating or a finance lease. It could be either type of arrangement. Yes or no? This is a pure sale. And in this sale, which she has made, she may have earned an income out of the sale of asset, or may have incurred a loss, or it may be at par also. We are not sure about it. So all the three types of arrangements were possible. But the idea for us to understand is about this type of arrangement, which is nothing but a sort of financing arrangement. This type of arrangement is called as sale and leaseback. So sale is made by one party to the other party, and very same day leaseback arrangement has been done so that the asset comes back to the party. Generally, in case of aircrafts, you see this type of arrangement. Yeah. Now, in this type of arrangement, depending on the type of lease it is, accounting is required to be done. So that's why I would suggest if you can go to page number 1.9. Let's see. What is the accounting requirement that we need to assess? Let's suppose if this sale and leaseback is in the nature of finance lease. So it's not operating lease, it's a finance lease. Standard says excess or deficiency of sales proceeds over the carrying amount. Whatever the sales proceeds, this is the sale proceeds. Let's suppose this has been sold for 10 lakh. Excess or deficiency of this 10 lakh over the carrying amount. Carrying amount means, let's suppose the asset was there in the books of Kushi at 9 lakh. So it's an excess. If let's suppose that was at 11 lakh, that will be a deficit. This should be deferred, means this should not be recognized immediately and amortized over the lease term. And it should be amortized over the lease term. Let's suppose the lease term is 5 years. Yeah. And over the lease term, let's suppose there is an excess of 1 lakh. That will not be recorded on an equal basis. That will be recorded in proportion to the depreciation of the leases. Yeah. Number 1. Number 2, the scenarios which the study material gives. It says, if let's suppose the arrangement is an operating lease. It's not a finance lease, it's an operating lease. In this case, 3 situations are possible. If the sale price, what is the sale price? Is equivalent to fair value, then the profit or loss on sale, we are talking about profit or loss on sale, that should be recognized immediately. If let's suppose the sale value is less than the fair value, profit or loss should be recognized immediately. However, if the loss is compensated by future lease payments at below market price, does it mean that there's a loss? Let's suppose on this sale there's a loss. Say it was there in the books at 11 lakhs and sold for 10 lakhs. So there's a loss of 1 lakh. Correct? Now, this loss should be recognized immediately. However, if this loss is compensated by future lease payments at below market price, now, even though Kushi incurred a loss of 1 lakh over here, but what's the arrangement between Kushi and Nakul? That the lease payments over here are below market prices. So in a way, Kushi will be earning, because whatever lease amount Kushi would have paid in the market, now she's not paying this. So that's why this loss is getting compensated through the lease amounts which are below market price. In such a scenario, what should be done? The loss should be deferred and amortized in proportion to the lease payments over the period over which it is expected to be used. Third scenario, if in case sale price is greater than fair value, then the excess over fair value should be deferred. Excess over fair value should be deferred and amortized over the period for which asset is expected to be used. Yeah. So we have these 3 scenarios in case of operating leases, and I think we can better understand all of these 3 scenarios with the help of some examples. That's why we should move on to illustration number 3 now. We are on page number 3, illustration 3. Okay. Yeah. So let's look at all of these situations which are given in this example and try to understand about the accounting of sale and leaseback. In case of sale and leaseback, one thing which you would have understood is that we are not focusing on the accounting of lease. Why? Because we have already discussed how will the lease be recorded, whether it's operating lease or finance. We are focusing on the accounting of sale, which has happened and which may have resulted in a profit or loss. Okay, clear? A Limited sold machinery having WDV of 40 lakhs to B Limited for 50 lakhs. So A has made a sale to B. Its WDV was 40 lakhs. So this was there in the books of A, having WDV of 40 lakhs. Sold for 50 lakhs. Sold for 50 lakhs. And the same machine is leased back by B to A. So it's a lease, sale and lease back. And the question is specified that the lease back is operating lease. Comment on the accounting treatment if sale price of 50 lakhs is equal to fair value. So if we say this is the selling price and this is also the fair value. So what is the accounting treatment that we are required to do in case sale price is equal to fair value? The gain. A has earned a profit on sale of this machine. That should be recognized immediately. Right? That should be recognized immediately. Yeah? So in situation number A, 10 lakhs goes to A. Situation number B, selling price is 50 lakhs, but selling price is lower than the fair value. So what's the fair value? Fair value is 60 lakhs. Now in this scenario, what do we have? We have a profit of 10 lakhs. And whenever the selling price is less than the fair value, so what do we need to do? We need to recognize profit or loss immediately. The only thing is, if it's a loss, then we need to check something, but it's a profit. So here again, 10 lakhs. Profit will go to theatre immediately. Yeah. Situation number 3. Okay, situation number 3. Fair value is 45 lakhs and the sale price has been changed. So now we are not saying it's 50 lakhs. We are saying sale price is 38 lakhs. Means it's sold at a loss. It's sold at a loss. And the sale price is less than the fair value. Fair value is 45 lakhs. So now there's a loss of 2 lakhs rupees. So what do we do? So in this scenario, the loss of 2 lakhs should be recognized immediately by A Limited. Why? Because we don't know whether it's getting compensated by the future lease payments. So 2 lakhs goes to A. Let me just tell you, this was a profit. This was also a profit. This is a loss. Correct? Situation number 4. Fair value is 40 lakhs and sale price is 50 lakhs. Now sale price is 50 If the sale price is 50, so that means we have earned a profit. But fair value is lower than the sale price. What's the fair value? 40 lakhs. So whenever we have the sale price higher than the fair value, what do? What do? Excess. In such a situation, excess over fair value should be deferred and amortized over the period. So now in this scenario, when the fair value is 40 lakhs, sale price is 50 lakhs. So what is the excess? Excess of selling price over fair value is what? 10 lakhs. Now we are not looking at the profit of 10 lakhs. Please understand. What is the profit? Profit is the difference between selling price and WDV. We are not looking at that profit. We are looking at excess of sale price over fair value. By chance, that is also 10 lakhs. So this 10 lakhs needs to be deferred and amortized over the lease period. This is deferred. And please remember, this is excess of selling price over fair value. Okay. Jimmy, you'll have to check in which scenario you'll have to compare the book value, in which scenario you'll have to compare the sale value with the fair value. That's why I've clarified now. Situation number 5. Fair value is 46 lakhs and the sale price is 50 lakhs. Here again, sale prices is in excess of fair value. When the fair value is 46 lakhs and the sale price is 50 lakhs, profit of 6 lakhs. Why we are saying profit of 6 lakhs? Because all in all, profit of 10 lakhs has been earned. Okay. Or maybe in simple terms, you can say something like this. From 40 we reach to 46 lakhs, and from 46 we reach to 50. Okay. So what's the profit? 40 to 50 is the profit. 10 lakhs is the profit. Out of this profit, 6 lakhs, which is the difference between fair value and the WDV, needs to be recognized immediately in the books. And balance, what's the balance? Excess of selling price over fair value. So now we are splitting this profit into 2 parts. Please understand. We have earned a profit of 10 lakhs. Yeah. This profit of 10 lakhs has 2 components. 6 lakhs plus 4 lakhs. So this 6 lakhs will go to P&L immediately. And this is the excess of selling price over fair value. This needs to be deferred. Clear? Clear on this? Yeah, clear on this? Okay. So last situation. Fair value is 35 lakhs. Fair value is 35 lakhs. And sale price is 39 lakhs. Here again, what do you see? Here again, you will see that the sale price is in excess of fair value. Sale price is in excess of fair value, correct? But here, all in all, we have incurred a loss. So let's see how is the accounting required to be done in this case. In this case, all in all, if you see, we have earned a loss of rupees 1 lakh on a net basis. Correct? We have earned a loss of rupees 1 lakh. But if you will see, we also have an excess. We also have an excess of sale price over fair value. What is that? 4 lakh. This is excess. Okay. Now this needs to be recorded separately. So the moment we are recording it separately, what are we doing? We are keeping 35 as the base. And if we are saying that this is the excess, so that means this is the loss. This 5 lakhs is the loss. And this is the excess. So the standard says that in this scenario, the difference between fair value and WDV should go to P&L immediately, similar to what we did in case of last example. So this should go to P&L immediately, and this excess of 4 lakh needs to be there. This needs to be there. Okay, clear on this? See, this can be a bit confusing for all of you. So that's why it's very, very important that you practice this, you revise this once, and then once again you practice all of these on your own. Only then you will be able to get more clarity and you will be able to remember all of these adjustments. In relation to lease accounting, if I have to say accounting of finance lease and operating lease, this is quite simple to retain. But definitely, some of these principles that we have discussed in case of sale and leaseback, particularly sale and operating leaseback. So you will have to remember these 3 case scenarios. If at all this is asked in the exam. Okay. Now, with this, we come to an end to our discussion in relation to this accounting standard. And before I move on to the next standard, if you have any questions, any doubts, please let me know. Any questions, any doubts? In case you have on this, please let me know. She seems to be clear on this. Good. What others? Any questions, any doubts in case you have on this, please let me know. Then we'll be starting with a new standard. Waiting for your response. quickly. No queries, no questions. Then I think what we can also do is maybe we can take a break now and then we can start with this new standard afresh. Yeah, we can also do that if you want. We can take a break now and we can start the new topic after the break. Yeah, clear? So in the meantime, if you have any questions, any doubts, please feel free to send your queries and we can pick up all of those queries after the break. Okay, yeah. So let's take a break. Jay, we can start. Hi, welcome back. So now we'll start with a new topic, new standard, accounting standard number 20, which is about earning per share. Okay. This standard is all about disclosures. Just give me 1 minute. This standard is all about disclosure. In relation to this standard, we will not be getting into the recognition and measurement requirements. As per the requirements of this standard, we are required to disclose earning per share in the financial statements. And where do you disclose it? We present it in the statement of P&L, and we also give a disclosure as regards its computation in the notes to accounts. So let us just quickly try to understand what do we mean by earning per share. Earning per share. Say a shareholder invested money in a company, and when he invested money in the company, the share price was rupees 10 only. Investment which he made was at the rate rupees 10 per share. But over the period, what will happen? Over the period, because of the earning its valuation starts picking. But we are not looking at that valuation. We are looking at the book value only. So that's why we are looking at the earnings of the company. When the money was invested, the company had only share capital, but now the company has also got reserves year over. So that's why, in relation to the money which the investor had invested, now we are trying to check what is it that he has earned year on year. Every year, what is it that he has been earning? So how do we compute it? We will say the profits which the company would have earned over the period. Say in 1 year, company has earned a profits of X amount, that divided by number of shares. So this will give us the earning per share. Means what is the earning which is attributed to every shareholder? It's a shareholder holding one share. Correct? This is something we mean by earning per share. This is a very important performance indicator from the perspective of the investor, because the investor would be keen to know what is it that he has been earning year on. Okay. Now, for us to compute earning per share, as you can see, two things are required. One is the profit, and second is the number of shares. But this profit or number of shares needs to be understood with some more technicality. So let's try to get into the details of this numerator and denominator, because all in all, in this standard, it's a play of numerator and denominator. So throughout the course of this standard, you will see that we will be talking about these two elements only and nothing beyond this. Yeah? Okay. So earning per share, which is also called as EPS, How do we compute it? Let's start with a pretty study material also. net profit or loss which is attributable to the equity shareholders. Net profit or loss. Why we are saying loss? Because it's not necessary that every year there will be a profit. Maybe there's a loss. So we will also check what's the proportion of loss which the shareholder has incurred. Attributable to equity shareholders. Why we are saying equity shareholders? Because we are checking this entire computation only for the owners of the company. And who are the owners of the company? Equity shareholders. If you look at preference shareholders, they will not be forming part of this. They are not the owners of the company. The real owners of the company are the equity shareholders. So that's why any adjustment which is required to be made for us to reach to this level, that means net profit or the loss which is attributable to equity shareholders, that is what will come over here. Divided by weighted average. Divided by weighted average number of equity shares outstanding during the period or the year. Now, it may happen that maybe during the year, number of shares which were issued by the company was 1 lakh, out of which certain shares were bought back, some more shares were issued, some shares were issued for cash, some shares were issued without cash. We'll discuss all of those situations. So it's not necessary that the number of shares may have remained same throughout the year. That's why the standard says you will not look at the number of shares as at the balance sheet date. No. This is the common mistake which we make. We don't need to look at the number of shares as at the year end. Instead, we need to look at the shares throughout the year. And how do we check it throughout the year? By taking average. And to this average, what do? We assign weights of time. We assign weights of time to compute weighted average number of equity shares outstanding during the period. And on the basis of these two, what is it that we will get? We will get earning per share. So now, what we can do is we can move on to the denominator first of all. And we can just try to understand how is this denominator computed, or how do we compute this average and down, for which we can refer illustration number 1. Go to page number 1.96, illustration number 1. Okay. If you have any questions, queries in the meantime, you can let me know. So we are given the number of shares as at the beginning of the year. 1st of January, 1800. Then, on 31st of May, additional shares were issued, 600. On 1st of November, certain shares were bought back. You are required to calculate weighted average number of shares outstanding during the year. Yeah, weighted average number of shares outstanding during the year. Okay. So let's see, how do we compute this? On 1st of January seems to be a calendar year. On 1st of January, the number of shares was 1800. Then the change came on 31st of May, when 600 shares got issued. So what is the cumulative number of shares? 1800. And here they became 24. This is the cumulative number of shares. Okay. Then on 1st of November, 300 shares were bought back. So now the cumulative number of shares became 2100, and it stayed up to year end. Okay. So now for us to compute the weighted average by putting the time weight, two methods are available. Let's see. First, what can we do? We can take these 1800 shares and assign them weight for 5 months, because there was no change in this number up to 5 months. So what do we do? 1800 into 5 divided by. Then the change came on 31st of May, and which continued up to 1st of November. That means we had 2400 shares for 5 months into 5 divided by. And then we had 2100 shares for into 2 divided by. So what do we get with this? With this, what do we get? 2100 shares. So this 2100 is what? This is nothing but the weighted average number of shares outstanding. So now this is the first approach which we have picked up by using the cumulative balances. Another approach which is possible will not take the cumulative balances, will take the number of shares as and when they change. So 1800 shares for full year. 1800 shares for full year. Then 600 shares have come on 31st of May. That means they stayed with us for 7 months. 600 for 7 months. Okay. Now, out of these two, 300 have been bought back. And this is for 2 months. So we need to reduce this because that is already included in these two. That is excess. So what do we do? 300 into 2 divided by negative. So this would again give us the same answer. We will get 2100 shares. We get the same answer in this scenario also. Clear on this? Clear on this part? Yeah. Any questions, any doubts in case you have on this, please let me know. Quickly. So this is all about the computation of this denominator. In relation to this denominator, this is how the computation will be done. So if you have any questions, any doubts, please let me know. Yes, over to you. Any doubts, any questions? No? Seems to be clear to all of you? Yeah? All right. So then we will also look at some of the situations which are at times required to be considered. For this, I would suggest if you can add 6 points which are given on page number 1.97 of the study material. So make a note of these 6 points. Let's read out all of these 6 points. This is only for the purposes of our understanding, clarity. Shares are included in the weighted average number of shares from the date consideration is receivable. For example, equity shares which are issued for cash, when would they get included over here? When the cash is received. Equity shares issued as a result of conversion of debt are included on the date of conversion. Equity shares issued in lieu of interest or principal are included as of the date interest ceases to accrue. Means the date when the equity shares came into existence, from that very day you will consider that into the weighted average. Equity shares issued in exchange for settlement of liability. So from the date when the liability comes to end. Equity shares issued as consideration for acquisition of asset. So the day when those are issued for consideration of the asset. Equity shares issued for rendering of services are included as and when the services are rendered, because that very day these would have been issued. Okay, clear? Yeah. Now moving further. It may also happen that instead of fully paid shares, at times partly paid shares are paid. The example that we have discussed was the one wherein we had fully paid up shares. What if the shares are not fully paid up? What do you do? How do you treat them? How do you treat them while computing this weighted average? Let's understand this one with the help of another example. Now refer to sample. Partly paid equity shares are treated as fraction of an equity share to the extent that they were entitled to participate in the dividends relative to fully paid equity share. So we have a couple of dates, 1st January and 31st of October, balance at the beginning of the year is given when the shares were fully paid up. But during the year, 600 shares were issued but are partly paid. You are once again required to calculate weighted average number of shares. Okay. So now, in this scenario, what do you do? On 1st of January and on the 1st of October. How many shares do we have? 1800. Paid up. These are fully paid up. Okay. So now these 1800 shares will consider for full year. $1,800 into 12 divided by 2. Then on 31st of October, 600 shares have been issued, partly paid up. And luckily for us, just to make the computation simple, how much is the part payment? 50%. So out of these, how many shares we will consider for the weighted average? 50%. So 600 divided by into. For what period we will consider this? November and December, because these have been for 2 months only. So what do we get? Summation of these two, what do we get? 1850 shares. 1850 is the number of shares. Okay, clear? Clear on this part? Yeah. Before I move further, let us just quickly understand about the adjustments in numerator. As we discussed, that numerator is all about net profit attributable to the equity shareholders. That's why whenever you are given profit, but an adjustment is pending for the preference shareholders, you will be required to make that adjustment because the profit should be the one which is attributable to equity shareholders. So any profit that pertains to equity shareholders should be the one after paying the amount which is due towards the preference shareholders. Yeah, at times the question may have this adjustment which you may be required. Yeah, okay. Now moving further and coming back to the denominator. Denominator means weighted average number of shares. In the examples that we have discussed about weighted average, there were few situations when we had number of shares which remained same throughout the year, when additions were done, deletions were done, and also the one when the additions were done but the shares were partly paid off. We understood how all of these will be considered while computing the weighted average. Another type of adjustment which may arise could be on account of bonus issue. Bonus issue. Bonus issue of shares means bonus issue of equity shares. And I'm sure you would have read about bonus issue in paper number 1. But I'm not sure how many of you remember this. So quickly, if you can let me know about your understanding of bonus issue. Yes, over to you. Quickly, if you can let me know what do you mean by bonus issue, what is your understanding of bonus issue, everything about bonus issue that you know, please let me know. Quickly, how are the bonus shares issued? Is there any restriction attached to the bonus issue? Everything. Yes. Now I'm waiting for your sponsor. About the bonus issue, your understanding is what you need to tell me. What do you mean by bonus issue? How are the bonus shares issued? To whom are they issued? Is there any restriction which is attached to them? Okay, Manish is saying bonus shares are issued from accumulated profit. Means those are issued from accumulated profit to the shareholders. Okay. Jamil is saying bonus issue means these are issued free of cost. So no income is received by the company. It should be given from the CRR. What do you mean by CRR? Yes. Any more responses from your side? This is very easy, huh? And I'm sure you would have covered this. Even in case of corporate law, you must have understood about bonus issue. Tell me. Tell me quickly. What do you mean by bonus issue? What is your understanding of bonus issue? So whatever you know about bonus issue, please let me know. Yes, about the bonus issue, please let me know. What is it that you understand? Kushi is saying these are issued only on fully paid shares without any consideration. Rama is saying these are free additional shares issued to existing shareholders without collecting money. Great. Nakul is saying these are issued free of cost to existing shareholders out of reserves. Priyanka has the same understanding and Shisha also has the. Shisha is saying company retains earnings and issued bonus shares. Okay, great. So this means you all know about the bonus shares, correct? So let's try to once again recap your understanding of bonus issue. Say for example, a company has been earning profits year on year. So how will the company reward its shareholders? By paying dividend, correct? So that is how the returns will flow from the company to the shareholders in the form of dividend. But at times, instead of dividend, wherein the cash flow is involved, company may decide to issue shares. Why? Because if let's suppose company pays dividend, company will also be required to pay the cash. But if the company instead of paying cash gives shares to the existing shareholders, and that too free of cost, means for additional shares which are given to the shareholders, nothing is charged from them. No consideration is asked from them. That becomes a scenario of bonus issue. Yeah. So it's a mechanism through which company is paying something to the shareholders, but at the same time not charging anything from them. And that's why it's very, very important for the company to have profits, company to have reserves, out of which all of these distributions can be done. It cannot happen that the company is incurring losses and issuing shares. Not possible. Yeah. So that's why law has also placed certain restrictions against this. Certain restrictions have been placed by the law as against this. Yeah. Now, as against those restrictions, we need to understand that in respect of a bonus issue, whether the money is coming or not, number of shares is definitely changing. Yeah, number of shares is definitely changing. Say for example, a company which had 1 lakh shares at the rate rupees 10. Now, even though let's suppose company is issuing shares, say 10,000, free of cost, it's receiving nothing. Why? Because it's bonus shares. The number of shares of the company has increased. So now this has become 1,10,000 shares. The number of shares have increased. Correct? Yeah. Therefore, when we compute the weighted average number of shares, we need to consider the bonus shares also. Yeah. Secondly, because the shares in respect of bonus are not paid in respect of this, money consideration, but out of the reserves of the company. That's why this is also termed as capitalization of reserves. Bonus shares or the issuance of bonus shares is also called as capitalization of reserves. Means the reserves of the company have been converted into capital of the company. Capitalization has been done. Yeah. Now, because of this reason, that the bonus shares have moved out of the reserves of the company, so that's why whenever bonus issue will be made, we will consider it from the date when the shares were in existence as against which bonus shares have been given. So let's suppose these shares were in place from 1st of April and the bonus issue went down on 1st of December. So when we will compute our weighted average, we will not consider this from 1st of December. Instead, we will consider this one also from 1st of April. Why? Because for issuance of this, reserves have been used, which existed earlier also. And over and above this, we will go to the last year, we will go to the comparative year also and make the same adjustment on bonus issue. Because last year, the EPS that we would have computed would be without bonus issue. We need to make it comparative. How do we make it comparative? By considering the same number of bonus shares, the last number. And you will be thinking, but say last year when we have already computed the EPS, we have already shown that in the P&L. If we change that in the current year as a comparative, will it be appropriate? The answer is yes. That's why the EPS, whenever there is a bonus issue, will have to be restated for last year. That is called as restated EPS. And that is not something which is allowed, that is something which the standard requires you to do. So you have to do this. Clear about the adjustment which is required to do whenever there is a bonus issue. Now, similar to this could be an adjustment due to split of shares. What do you mean by split of shares? Stock split, share split means we had one share of rupees 10 and now the share has been split into two shares of rupees 5. This is called as share split or stock split. This is also at times done by the company as part of its restructuring exercise. So whenever you have a stock split, share split, the similar sort of adjustments means similar type of adjustments in terms of restating the last year's EPS will have to be done. Similar, by similar I mean to say, similar will be the one which you do in case of bonus issue. So let's now try to understand with the help of an example what adjustment is required to be done and how is that required to be done. What do you mean by that? Will not consider this number of shares from this date, will consider this from this date. How will we consider the number of shares from the last year? What will happen to the last year's EPS? Everything will cover with the help of this example. So we can now move on to illustration number 3. Yes, let's go to illustration number 3. Okay, so let's go to illustration number 3. Page number 1.99. Net profit for the last year was 18 lakh. So I'll just put down the numbers. 2000 x1 and 2000. Sorry, I'll make it as current year. This is the combined. So last year net profit was 18 lakh. And the current year's profit is 60 lakhs. This is the profit. Okay. Jamil is asking, by issuing the bonus shares, EPS gets reduced. Let's see. Okay. Let's see what will happen. Number of equity shares outstanding until 30th September X2, 20 lakh. So that means last year also the number of equity shares was 20 lakh. Okay. On 1st of October 2000 X2, bonus issue was made. 2 equity shares for each equity share outstanding was given. Against every equity share outstanding, 2 equity shares were given. So there was bonus issue on the ratio of 2:1. 2:1 means for every equity share, 2 equity shares were issued. So number of equity shares outstanding was 20 lakhs. So how many bonus shares have been issued? 40 lakhs. Okay. You are required to calculate basic earning per share. Forget the word basic. Just simply think you are required to compute earning per share. Now, for earning per share, what do we need? 2 things. First, net profit attributable to equity shareholders. Now, we don't see any adjustment in the net profits. That's why, what do we assume? That this is the net profit attributable to equity shareholders. That means numerator is available with us. So I'm making it as A. This is the numerator. Yeah. Now, what do we need? We need the denominator. We need the denominator. Now, in the denominator, what do I need? Weighted average number of shares outstanding during the year. So now, if there was no bonus issue, then this calculation would have been very easy. Why? Because then I would have considered 20 lakhs as the number of shares which remained outstanding throughout this period. But unfortunately, there has been a bonus issue during the year, and which will require me to compute the weighted average number of shares. Okay. So let's see how do we compute it. We have already done this computation. Weighted average. We have got 20 lakhs as the number of shares into 12 divided by 12. These many number of shares remained outstanding throughout the year. Yes or no? These many shares remained outstanding throughout the year. Yeah. Because after that it has only increased by 40 lakhs. Now to this, we may think that 40 lakh is the number of shares which has come on 1st of October. So that's why we should consider this for only 6 months. 40 lakhs we should consider only for 6 months. This is the immediate thought that will come to our mind basis the discussion we have done so far. But this will not be appropriate. Why? Because now it's a bonus issue. So whenever it's a bonus issue, from which date we will consider these shares or these additional shares? not from the date of issuance of this, but from the date when these shares have been outstanding. So that means from the beginning of the year. So what will happen as a result of this? This will become 12 years. That means what is the weighted average number of shares we will have? That will become 60 lakh. This will become 60 lakh. Okay, yeah. So this is B for me. This is B for me. Now, if I have to compute earning per share, so how do we compute this? A divided by B. So what do I get? I'll just clear this one. So this I know is 60 lakhs. This is B1. I think Sakshi already computed this. Very good. So this is rupee 1. So now, for the current year, I have computed this. For the current year, I have computed my EPS. This comes out to rupee 1. This. Now let's suppose if I go back to previous year. What is the EPS that I would have computed in the last year? Can any of you tell me? What is the EPS that I would have computed in the last year? Last year, my profit was 18 lakhs and the number of shares remaining outstanding throughout the year was 20 lakhs. So, what would have been my EPS in the last year? Can you tell me? 18 lakhs divided by 20 lakhs. So, what is the answer? Can any of you give me 18 lakhs divided by 20 lakhs? It's 0.9. Last year, my EPS was 0.9 per share. Okay, but now, when I will draw the P&L, I'll also be showing the comparative. In the comparative, I cannot show my EPS as 0.9. No, that will be incorrect. I'll have to adjust this EPS. I'll have to adjust this EPS by taking this bonus issue to the last year also. So I'll take this to last year also. The moment I take it to last year, what is it that my weighted average will become for the last year? 60 lakhs. For last year, my weighted average will become 60 lakhs. And because of which, what is going to be the revised EPS for the last year? It will become 18 lakhs divided by 60 lakhs, which will be 0.3 per share. So you can see that now when I will show this in the P&L of the current year, the comparative that I'll have to show will be 0.3 per share and not 0.9 per share. And please also understand this will be the right comparative. Why? Because if I am showing the EPS after making the adjustment of bonus issue for which I have not received anything, then we should consider the same number and should check what would have been my EPS by considering the same bonus issue. And only then I will get to understand that my EPS has actually increased from 0.3 to 1, which is a significant increase. Yes or no? Yeah? Yes or no? Clear? So this is about the adjustment of EPS that we are required to make whenever there is a bonus issue. And this EPS which you compute for last year. I am talking about this one. This is called as adjusted EPS. This is also called as restated EPS. So in the exam, when you will give your answer for this 0.3, you will not write EPS. You will write adjusted EPS. Okay? Yeah. This EPS of rupee 1 in the current year is not the adjusted one. This is simple EPS. But for this, you will have to add this word adjustment. Alright? I think many of you computed this. Very good. I can see a lot of responses coming from you. Sakshi, Rama, Manish, Shabir, Kushi, Manish, they all great. So based on some of your responses as regards this. Yeah. This, you are clear on this concept about the adjustment required in the EPS. Okay. So now we need to discuss similar sort of concept in relation to computation of EPS after considering the adjustment of right issue. So far, the discussion that we have done was for bonus issue. Now we also need to discuss about right issue. But I'm not getting to the details of right issue right now. Don't worry. We'll pick up this adjustment in the next session. But it's very important now for you to note down two things. So maybe you can mark it as your homework, because that will be important, because I think you will have a gap of some time before we meet now. Your homework first is to revise adjustment of bonus issue. And number two is to revise your understanding of right issue. You may be thinking, but sir, how can we revise right issue? We have not discussed about it. The right issue, I'm sure you would have covered in paper 1 or maybe in law. If you have done it over there, just go through that understanding so that whenever we meet next, you know it. We will anyways discuss about it, but if you have pre-understanding, that will only help you to understand the concept in a better manner. Secondly, the adjustment in relation to right issue is very much on the same lines which we have done for bonus issue. So that's why it's necessary. Please note down, it's necessary for you to revise this concept of bonus issue before we meet next. Otherwise, what will happen is you may get stuck, because right issue adjustment has got few more tricks, or you can say there are 2-3 technicalities which are involved over there. That's why it's very, very important for you to do that. Kushi seems to have done this already, but anyways, you need to do it again before we meet next. Manish is saying, but the profits also become low now by issuing bonus shares? No. How can the profits go down? Profits will stay with the company. And that is the reason why you have been issuing bonus shares, because you don't want any cash outflow to take place. Bonus issue is something that will go out from the reserves. Even if you say it's profits, that profit is the one which is the distributable profit. So that is no different from the reserves. Okay. Clear? Yeah. So any questions, any doubts? In case you have on whatever we have discussed so far, please let me know before we end our discussion, because we are not picking up anything further. In the next session, when we meet, we will cover the remaining part of AS20, and we will also be starting with a new accounting standard. Okay. Yeah, so that's going to be the agenda. I also remember one of you had a query regarding the time schedule for August. I am sure that the time schedule will reach out to you before the next session itself. But as per my understanding, the next session will be on Monday. Yes, we have been having sessions on Monday, Wednesday, Friday. So same thing will continue in August also. I don't see any change. Okay, accordingly you can plan, but you will definitely get the detailed time schedule also. All right? Yeah. So if you don't have any further questions, then we can wind up our session over here. Thanks to all of you once again for your time, for your wonderful participation. Thanks so much. And please remember to complete the homework that we have been discussing all through. This homework in particular before we meet next, and practice the questions which are given in test your knowledge section or the questions which we have already done in the class. Okay. Yeah. Thanks so much.